Hey internet pals, welcome to Live Richly, IKEA, and on this channel we help each other become better investors. And if you can't tell from the thumbnail, we are talking about investing in grass, weed, pot, ganja, butter, sticky, icky, 420, marijuana. Cannabis stocks have taken off this year, but everyone seems to be talking about Bitcoin, crypto, and NFTs. So should you add cannabis to your watch list? This video will help you make that decision. Please consider subscribing and hitting that notification bell if content like this is your jam. Let's get into it. So why are cannabis stocks taking off? There are 4 reasons I was able to find. But if you look at a decade ago, only 10 countries around the world had legalized cannabis use for medicinal purposes. And that number today is about 70. So this leads us to the main reason why cannabis stocks are up. Legalization. Legislation is just catching up with the times. The second reason is the stigma around cannabis use is not as strong as it used to be, as more and more people are open about their use for cannabis for medical purposes, in some cases recreational purposes as well. The third reason is the medical professionals are recognizing the use of cannabis for chronic pain treatment and other pain management programs. And the last thing is pharmaceutical applications. So GW Pharma, a company that I've been looking at for a while now, is a perfect example of a company that treats symptoms of 2 specific childhood epilepsies. And due to their success, a lot of other pharma companies are investing in R&D for what other uses the cannabis plant can offer. So let's just go into a little background on the industry and the reasons for its crazy growth. So worldwide spending on cannabis topped $29 billion, and this is projected to increase to $63 billion by 2024. That's an increase of over 200% or compounded growth rate of 21%. If you can find me an investment that's compounding at 21%, please let me know. Cannabis is also legal for recreational use in 11 US states and for medical use in 33 other states. So amidst the global push to legalize the use of cannabis, these governments around the world aren't just realizing that the medicinal benefits of using cannabis, or how the drug might not be addictive as they thought, as they've been claiming. It's because they've realized that they're leaving a lot of tax money on the table. So I honestly think that legalization across the world is going to happen faster than people realize. It's inevitable as soon as money is in the mix. So when it comes to picking marijuana, cannabis stocks, it's not about picking the cannabis sector anymore. It's about picking the business and the strategy. So in Cannabis 2.0, we've got smart investors who've come out of banking, pharmaceuticals, and are looking to bring profitability to this market. How to invest in cannabis? The best way to invest in cannabis, in my opinion, if you know anything about this channel, is we love an ETF, is an ETF. ETFs give you a low cost way to invest in different parts of the supply chain. So from growers, distributors, pharmaceutical companies, you name it. So you can get a lot of diversification with one product. And if you would like to know more about ETFs, you can watch my explainer video up here or listed in the description. So I'm going to compare the ETFs that I found to the S&P 500, which is usually the gold standard when it comes to investors looking for a stable growth investment option. The first ETF is the Alternative Harvest ETF, ticker code MJ. So cannabis ETFs have some of the best names, but this is the first pure cannabis exposure ETF listed in the US. So this ETF tracks an index of companies involved in the legal business of growing, marketing, and selling cannabis products for medical and recreational use. The ETF has a fee of 75 basis points or $7.50 for every $1,000 that you have invested in it. But how has it performed? Glad you asked. So, performance over the past 12 months has been a crazy 126% return. The asset size has grown to 1.75 billion, which is not small, but it's not too big. And it holds about 31 companies. So in this one product that you pay 75 basis points for, has returned 176% over the past 12 months, and its asset base is 1.75 billion, which is pretty sizable. So another thing to consider about MJ is that it holds stocks in companies that trade or produce tobacco products, fertilizers, and pesticides. So this has resulted in the ETF having an ESG rating of BBB, which is, I'll put the scale up on the screen so you can see where the BBB sits in relation to the other classifications, but it's not bad, but it's not the best. So that's something that depends on your ethics. If you're someone who cares about this sort of stuff, or you just want to make money, you do you. So the second ETF is the Global X Cannabis ETF, ticker code POTX, or I like to call it POTX. And performance over the past 12 months has been 65%, fee of 0.50% or $5 per every $1,000 you have invested. The asset size is 187 million, so it's significantly smaller than MJ, and it holds about 26 companies. So the third option is the Advisor Shares Pure Cannabis ETF, ticker code YOLO or YOLO. This is an actively managed ETF that seeks long-term capital appreciation by investing in both domestic and foreign cannabis equities. Cannabis equities are defined as companies that derive at least 50% of their revenue from cannabis or hemp industries. So how has YOLO performed? This ETF is up 182% over the past 12 months. The investment fee or admin fee is 0.75% or $7.50 per every $1,000 invested. The asset size is 384 million. There's about 30 holdings, so one ETF you could own 30 companies. The return has been 182% over 12 months. I'll take that, and it has an ESG rating of A. It's an interesting space to invest in. More and more countries are going to legalize it, if not just for medical purposes, but I think most of them are going to want that tax money. I would focus on picking an ETF instead of picking single stocks or specific companies, because you just want to spread out that risk, since there's a lot of volatility in this space, so keep that in mind. You have to be in it for the long term, and the longer your investing time horizon is, the less impact of volatility of the stock market. So there might be some ethical considerations to the fact that big tobacco is moving into this space, is they already have infrastructure and funds in place. So just be mindful if you're looking to invest in cannabis but don't want to have to be invested in tobacco. Let me know if this is something you guys are going to add on your watch list. Until next week, don't forget to call your moms, and I'm out. Peace.